What's going on, everybody? Liam O'Reilly, Vermont Economic Realtor. Hope you're doing well. Talking today about CPI, talking about inflation, how the Fed is going to look at inflation to make their rate hike decision moving into the future with the recent financial turbulence that's happened in the banking sector. So we're going to talk about that. We're going to look at the CPI numbers, how, obviously the Fed rate hikes affects mortgage rates, affects the bond market, affects the real estate market. So what are they going to look at when it comes to inflation and their upcoming rate hikes, and how does that affect housing here in America? So taking a look at this Yahoo Finance article, we're just going to look at the headline here and then we're going to get into the data. Housing costs dominant factor in February inflation data as rents show signs of cooling. So then they have a little chart of the Fed's fund rate there in this video playing that we are not going to watch. Getting into the CPI numbers. So what do they mean by this? With housing inflation leading the inflation push here, causing a big spike in the CPI numbers, but at the same time, rents are cooling. So what is going on? So if you look here, this is the BLS, Bureau of Labor Statistics chart regarding inflation. And you can see here categories of relative importance out of 100, and then each of these are the percentages that they weight into the overall CPI number. So right down here, shelter, rent of primary residence, 7% of the number, and then owner's equivalent rent of the residence, 25%. And if you look at both of these numbers, the month over month, so this column right here that I'm highlighting is the month over month change, and then we have the year over year just to the left of that. So over from shelter, month over month, shelter is up 0.8% month over month, which is crazy. I mean, look at that. And then 8.1% year over year. That is very high. That is, way too high for the Fed for what the Fed wants. That's way higher than 2% inflation, right? 2% would be around 0.2% month over month, and then 2% annualized. Now, rent of primary residence up 8.8 year over year and 0.7 month over month, and then 8.0 for owner's equivalent rent and 0.7 year over year. So that is what the BLS is showing as far as the CPI numbers and what the Fed is going to look at. Now, when we look at Redfin, and I'm going to bring this all back together, so just keep those numbers in the back of your mind here. If we look at the Redfin data here, U.S. median asking rent is up 1.7% from a year ago, smallest gain since May of 2021. So by Redfin's accounts, so if you look at this is the chart of median asking rent. You can see it peaked out, it looks like over the summer, and then is just barely up year over year. And so this is the data that Redfin uses as far as when you list your home for rent online and you try to get a new tenant in there. That is this measurement, the asking rent. Now this is the derivative of that chart. So this is the year over year growth. We're at 1.7%. So keeping both of these numbers in mind, they really seem contradictory, right? The rental inflation data, according to the BLS, is up month over month very significantly, looking at about 9% year over year, even on a month over month basis. Now, some things to keep in mind is how the rent that they look at are owner's equivalent rent and rent of primary residence. So rent of primary residence is pretty simple, right? They look at, okay, what are you paying for rent as a tenant, and what were you paying last year? And so that is the month over month data. And if we look at the year over year data that the BLS is using to come up with their inflation number. So that's different than landlords who have a vacant unit and are putting that vacant unit on the market trying to attract a new tenant, right? That's a new number. You might not increase your rent as quickly if you have an existing tenant that is, good, that is taking care of your property. You might not have increased your tenant's rent as steeply or as sharply as you would have if your unit's vacant and you want to just bring your unit up to market rent. So that's kind of the difference in those numbers. And then another big factor into the CPI number is the owner's equivalent rent. And if you haven't heard about what this is basically they ask homeowners, if you were to rent out your house, what would you get for it? So as they start to ask these different homeowners, what could you get for your rent? That is 25% of the overall inflation number, and that number continues to go up. In my opinion, that's not a good indication of what the market is saying, because the market rents are not what owners would ask for their rent necessarily if they could get it. It's really just a survey number and an estimate. So what is the Fed going to look at, and how does this affect rate hikes? How does this affect the home buying market as well as the rental market? The Fed is going to look at, obviously they're looking at the BLS data, but they also know that there's a lag in this data compared to the asking rents, right? The asking rents have been declining, and that is kind of the live market data of, okay, I'm renting my apartment, is there somebody to fill this spot? Whereas the median rent and the CPI rent, the rent of primary residence and owner's equivalent rent, that goes up slower, because if you think about all of the tenants out there that are renewing their lease, not all of them are entering into a new apartment. So those rents might be ticking up consistently still as the renewals come, and as these landlords start to raise the rent on these tenants, even if it's not at a at market rent, it's still up year over year, right? If you compare these numbers, what were you paying this year compared to last year? What were you paying this month compared to last month? Obviously, month over month, the median rent doesn't, or the owner's equivalent rent and the rent of primary residence doesn't change for individual tenants, but as a whole, as a group, it trends up slowly as leases expire and people re-sign their rent. So the Fed knows that there's a lag in that respect. And even though CPI was really high, it was led by shelter inflation, led by rents and owner's equivalence rents, which the Fed knows that there's a lag in that data. So when the Federal Reserve looks at the rest of the CPI report and sees positive data in the rest of that report, in my opinion, they're going to look at that and say, okay, maybe we should pause. Maybe we should, it sounds like a 50 basis point hike is pretty much off the table, but I think the fact that the CPI report came in so positive, besides rents, and the fact that we're seeing cracks in the financial system, in my opinion, that makes the chances higher that we are going to see a pause and a much lower Fed funds rate, as many people are predicting now, as the markets are pricing in a much lower Fed funds rate than what was previously anticipated over when Jerome Powell was testifying in front of Congress. Now, something else to note that Redfin noted here is that the number of apartments under construction is up 24.9% year over year to 943,000, the highest level since 1974, according to a report of the National Association of Home Builders. So how does that affect the housing market? If rates stay high, so I was wrong with this. I thought that higher rates were, just like with how builders building properties to sell have been discouraged because of these higher rates. I thought that was going to discourage builders bringing properties to the market to rent. But as you can see, the highest level of new apartments is being constructed since 1974, which is crazy. It's not what I thought would happen in this high interest rate environment. So what does that mean for rents? What does that mean for the housing market? I mean, with new properties coming to the market, as there's more vacancies, as asking rent starts to decrease, and I think that's going to add some additional relief to the shelter inflation in the future. It's not like these companies are all of a sudden going to stop building unless something happens, like their bank fails and they lose their money, they lose their financing. But for the most part, most of these apartments are likely going to come to market, which is going to bring additional relief to shelter inflation. Even basically, despite what the Fed does, if they hike rates or if they keep rates stable, it seems like these apartments are under construction and they're going to be brought to the market. So that's positive in if you're a renter, in the sense that rents are probably going to come down. As far as the home buying market, I think that could take out some demand that we've seen. If renting a home is significantly cheaper than buying a home, especially with higher rates, then we're going to see an even more significant slowdown in the housing market as demand starts to tick off and meet supply where it's at. Especially, again, something to keep in mind. I've said this in other videos. There is no national housing market, so you really have to pay attention to your individual market. And if we go back to this Redfin article, so you see the declines, like Austin, Texas, rent declines 6.5%. But then the 11th most decline market, Virginia Beach, minus 0.2%. And then we look at the top 10 rent growths. Charlotte up 14%, Columbus up 12%, Milwaukee up 9%. So if you just look at the overall national data, it's not necessarily going to reflect accurately on your housing market. So I know here in Vermont, there's not a whole lot of supply of rental housing coming to the market. There certainly is some supply, but not as much as we need. And even if that supply adds some relief to the overall home buying market, demand is still well outweighs supply, and I think it's still going to be strong here in Vermont, even if rental housing becomes a little bit cheaper and starts to take away some of that supply. So anyway, Liam O'Reilly, Vermont Economic Realtor. If you're looking to buy or sell a home here in Vermont, all my contact information is in the description. Feel free to reach out by phone or email. If you're looking in another state, please reach out. I will help you find a great realtor who knows what they're doing, so you have someone who's knowledgeable and understands what's going on as you make one of the most important financial decisions of your life. Leave a comment in the description. I love hearing from you folks. I love, I learn a bunch from you guys, and let me know, do you agree? Do you disagree? What do you think is going to happen with CPI, with the Fed funds rate, and the housing market as we move into the future? All right, guys, until the next video, I'll see you later.